Hello, this is Gary Kuhn. I'm Managing Director of Finer Wealth Management, and I'm here today with Mike Finer, who is President and CEO of Finer Wealth Management. And we thought we'd do this particular segment about the election. As we tape, we're in January of 2017. However, it was such a momentous and talked about election year. It's still on people's mind. They're still thinking through the ramifications. And so we thought we'd talk a little bit about that today. Notwithstanding your particular political view or which presidential candidate you supported, the result is sort of in the bank, so to speak. And it's important to have a sense of how that might impact the U.S. economy as well as individual portfolios. We'll turn it over to Mike.
Thank you, Gary. The number one question we have been getting recently relates to how the Trump election and presidency is going to affect the world. Well, we can't really speak to every issue, such as foreign policy or social issues, but we can speak a little bit to the economic issues that we think will play out with the Trump presidency. As an overall general opinion, we do believe that the Trump presidency will be positive for the economy and the stock market. And that's for two main reasons. Number one relates to the push toward lower corporate and individual income taxes. That should provide a short-term stimulus to the economy as individuals and corporations use that extra inflow of cash to invest or to pay dividends or to consume. With that, the lower regulation will also provide a stimulus to the economy. While it might be psychological at first, it should also be an impetus for increased investment. For those two reasons, we do think that the Trump presidency will initially be very positive for the stock market. Gary?
We also think that there are a number of initiatives in certain industries that might benefit from some of the programs that the Trump administration offers, one being infrastructure spending. Companies that may be involved in infrastructure projects throughout the economy, that's one area that we're continuing to take a look at that may benefit by increased spending and investment in that sector. Another area to look at is the financial services arena because of the increases potentially over time in interest rates and the change that may make with regards to the profitability in the financial services arena. That certainly bears looking at. We continue to believe that the Trump administration and its policies should benefit the United States economy. We're also looking more internationally. That's an area that we've felt was more volatile than the United States and unpredictable, and may continue to be so. However, there may be some opportunities in that arena in the next year or two.
And with that, with the Trump presidency, it really speaks to the second question that we get quite a bit, and that is, how does one take advantage of the new election or the Trump presidency? Our belief is that a multi-asset class portfolio that contains a diversified stock, bond, commodity, precious metal, and other asset portfolio is a portfolio that will sustain a family of means through all economies. We still hold on to that belief that a multi-asset class portfolio of multiple asset classes will be the best allocation for 2017. But as Gary mentioned, with that, the particular allocations within our multi-asset class portfolio will change in 2017 as we potentially invest more in financial services, technology, and energy. Those areas that will do well, such as infrastructure in the economy. So it's very important that you take a look at your portfolios to take advantage of those areas where there will be increased aggregate demand in 2017 and beyond. With that, we also take a very hard look at trying to create positive returns over time. And at Final Wealth Management, we provide very steady positive returns over time because we do provide over 40 individual stocks, bonds, and other assets in our diversified portfolios. And we do suggest to people who are looking for defense and steady gains over time that they partake in this type of approach.
And just going back to the political side of things, obviously there's always gridlock in Washington to a certain degree and by design. And however, this is an unusual time where you're seeing a one-party skew that not only is the case in Washington, D.C., where one particular party has the presidency, the House, and the Senate, but it's the same party skew across the United States in the governorships and in the state legislatures. So notwithstanding the sort of ordinary give and take in Washington, D.C., I think you may see at least the potential of some synergy between the federal program and the state and local program because of that one party alignment that is a result of this particular election cycle. So as a result of that, the programs that we've been talking about that may impact certain areas, you may see that alignment throughout the economy, which I think gives a higher potential for these programs to actually be implemented.
Those are all excellent points. And with that, because of the controversial nature sometimes of the legislation and the one-party system, and that the Republicans have for the next 2 years at least, we do expect, though, that there will be some volatility, maybe some severe volatility in the stock and bond markets and even the metals and commodity markets during 2017. So that's an important feature to consider.
So diversification, as well as keeping a little powder dry to be able to take advantage of opportunities as volatility enters into the system, seems to be a proven approach. And we hope you'll continue to watch these videos at our website, finer.com and finertv.com. And thank you for joining us for this segment.
And please like our Facebook page.